Everybody, it's Brian Shannon from alphatrends.net. Today is Friday, the 1st of July, 2022. And if you waited all year to get involved, then you like the returns. The month to date, we're up 1% in the SPY, 1.3% in the Russell, but those semiconductors are down a bunch here and just a terrible year so far. If you're watching this on YouTube, please give it a like and subscribe to the channel, and be aware that I post a ton of information on Twitter. And if you're just following me on YouTube, you're missing a lot of information I put out during the week. The S&P 500 on the daily time frame is still clearly in a downtrend. We have a very clear pattern here that is lower highs along with lower lows. We have a declining 20, declining 50, declining 100, 200 day moving average, etc. We're guilty till proven innocent. That remains the overreaching trend. On the weekly time frame, daily time frame, we're broken. We need time to heal. On the 15-minute time frame here, you can see I've got a volume weighted average price from the gap lower to the low that we saw this year, and the 5-day moving average is in orange. This is the week to date volume weighted average price. So we made it right up to the declining 5-day moving average today. I was kind of surprised actually that the market did make it higher, because the S&P 500 was able to make it higher, and the Nasdaq, because the semiconductors were down over 3% here today. And typically the semiconductors lead the Nasdaq, and when the Nasdaq falls, it drags the rest of the market with it. Typically today, obviously it didn't. Semiconductors were down 3%, and the trend is clearly lower. I was asked on a Spaces yesterday what I thought would happen for Micron, because they were reporting earnings last night. I said, news and surprises follows the direction of the trend. It's more likely to fail than it is to turn around here. But back to the semiconductor index, here on the weekly time frame, we're down to the 200-week exponential moving average. As you know, I look at simple moving averages, and the 200-week simple moving average ties the volume weighted average price from the 2018 low. I think it's inevitable that we get there. I don't think it's going to be a straight line down to that level, but the risk remain high for the semiconductors, and that increases the risk for the overall broader market as well. But when we take each market, whether it's a sector, a stock, whatever it is, I always believe you trade each stock based on its own merits. You're aware of the overwhelming trend, the bigger trend that is, and if the bigger trend goes against what you're seeing on shorter term time frames, then you adjust your position size. So again, looking at the 15-minute time frame, we saw a little bit of stability here, which is good. Now, it's not bullish by any measure. We're still below the declining 5-day moving average, but we really haven't made it, any downside movement here. And again, the ability for it to close above this volume weighted average price, I think, is sending a message that there are buyers in here. Now, if we break below this level next week, you can look for new lows in the S&P 500. Most likely, it begins a move down towards that 200-week moving average, which is also the volume weighted average price from the 2018 December of 2018 low. We've also looked, of course, at the Fibonacci here. So that, from this low, the COVID low, to this year's high, that's also a 50% retracement. This is a 38.2%, 50%, 61.8%. So, the trend remains lower. We're seeing a little bit of stability. It's clearly much too early to buy the average stock. In fact, it amazes me that people continue to try to pick bottoms in stocks like Workday. Let's just look at a couple of examples of what are so-called good stocks here. Workday, Teladoc has been a big one that people have been saying is down too much over and over again. We're down from over 300 into the 30s. We're down 90% in this stock. The thing is, don't buy these stocks. Well, they still have a decline 20, 30, 40-week moving average. If they don't scare you out, they will wear you out, just like we're seeing in DOCN. Same story. It's maybe finding some stability here, but it's clearly not bullish. DOCU as well. How about Fiverr, FVRR? The list of these names that have round tripped is just astounding. And, I've seen it once or twice in my career. And if they don't scare you out, they're typically going to wear you out. You can get some nice bounces in here that you can trade in Fiverr, in stocks like, Pinterest. Pinterest has had some nice bounces, but look at how it's being rejected at the year-to-date volume-weighted average price. Look at the weekly time frame here, completely round trip. PayPal, same story, complete round trip. This thing, people were telling me at 240, at 180, at 160, 120, 90 that it's down too much. It's a good company. It's going to bounce. And I've been saying, listen, maybe it's a good company, but it's a bad stock. It's still got all these moving averages that are declining, and you can get some nice bounces along the way. But just as in these individual stocks, we want to treat the broad market the same. They're bounces in downtrends. We've had, this last rally was, I think, 9%. Then we had, several big rallies prior to that. I've posted that chart several times of what those numbers were. In fact, I'm looking over here and I see, we had, this was, as of June 17th, this had been a bigger rally here of, close to 10%. That was a rally of 11%, 9%. And those were earlier in the year. We've had bigger, this rally was a big rally. But the primary trend, the sum of the declines is greater than the sum of the rallies. That means there's more opportunity on the downside than there is on the rallies. If you're going to trade the rallies, trade them for what they are. They're bounces in a downtrend. The Russell 2000, same story here. It remains in a primary downtrend. When you look at that weekly time frame, we've got the volume weighted average price down here from the 2016 low that we've had our eye on, and no support at the 200-week exponential moving average, no support at the 200 simple moving average. There are levels of interest to look at on a shorter term time frame for evidence that maybe the buyers are gaining control. And when we drill down and we see that they're not gaining control, we don't get involved. Or again, as it breaks a higher high above the flat to rising 5-day moving average, a buy for a bounce in a downtrend, fine. Maybe you got stopped out here. Maybe you got stopped out over here. But this is where it made a lower low below the declining 5-day moving average. That's where short sales are back in alignment with the overall trend. Buying here as it broke a higher high above a flat to rising 5-day moving average is higher highs and higher lows. They get stopped out in here. I didn't get short this week. I was looking for the possibility of, maybe turning around. I was clearly early on that, but, basically the last 3 days of this week have been a chop fest in here, in the not just in the Russell 2000, but in the Nasdaq and in the S&P 500. They've, the last 3 days have done a whole lot of nothing. The question is this support, is this forming support in a base that maybe we start to rally from next week and, add to this prior little rally here? It's certainly possible, but what's most likely with a primary downtrend? Unfortunately, lower prices and perhaps a test of that volume weighted average price from the 2018 low. Biotechs are the group that have been strong lately. I don't think that they've made their ultimate bottom in here. I think, again, that it's the same story as always. If they don't scare you out, they'll wear you out. What's the direction of the 20-week? That's that blue moving average down. 30-week. It's trending lower. 40-week, it's trending lower. There's still money coming out of these things. Certainly, they're experiencing a nice bounce in here. Some people will say this is a double bottom. A double bottom is officially found as it breaks above here. So, if it's to do that and you're, trading for that, well, let's just call that 105 and 120. Your upward objective would be 135 in these. So that would bring it up to this level. It's certainly possible. I don't think it's a straight line if it does it, but if you're looking to trade that type of trade, this is where your stop would go, I think. We were 50 days ago right over at about right here. So this red candle right here was 50 days ago. That means in 2 or 3 days, if we hold on to these gains, that 50-day moving average will begin to flatten out in here, and then the 20 will cross up through it. So that could support the potential of a bigger bounce, and if so, stop goes under here. There are a number of names in this group that look like they're worth examining, such as Alkermes, ALKS. Here's a weekly chart. Nice longer term. It's above all the key moving averages. They're rising. I don't, know anything about this biotech company, and a lot of times the biotech companies will be very difficult to trade because there's news that surrounds them, and when they fail miserably. But Vertex is another biotech, and I'm just looking at my list, seeing what else I had written down. HRMY is another one that's Harmony Biosciences that's been very strong. There's names out there to trade in this environment, but again, I think that your advantage comes from position sizing and realizing that the overall trend still remains lower. We're going to have earnings start to come out here in the next few weeks as the end of this quarter, as the end of the second quarter just closed. And, usually 2 to 3 weeks after that, we start seeing the banks report and then, all the other names as well. So we're coming into earnings season again, and, expectations have been diminished a lot. A lot of the oil names have, really fallen quickly. This was a 25% decline right here in the matter of just 3 weeks. And if you recall, just over the last 2 months, I've been saying the name of the game in here is protect your gains. Don't let what happened in the technology stocks happen to you in these names. There's one name I kind of look at and think that this thing has the potential to really fall apart. This is Denbury, DEN. I mean, you can see here. Here's a stage one accumulation, a beautiful stage two markup, higher highs and higher lows, and then this big stage three distribution. All this prior support. Look at all the people who've purchased over the last 18 months, 20 months in there who are in a losing position. This is why support broken tends to act as resistance as it did in here. It's not going to be an exact number, but more of a band of support acted as resistance because all the people who bought in here, not all of them, but a lot of the people who bought in here, saw it drop down. They said, hey, if I can get out even, I'm going to get out even. This looks like it's just beginning a new stage four decline, which could see this thing collapse. I don't know anything about the company. I don't care about the company. I'm here to trade the stock. And if it sets up, then I would be interested in shorting it, and you have to look at it and say, well, what would change this downtrend? If it was to get back above there, certainly, but I would rather see it, shortable, either something like, I'll show you two potential entries. One would be here as it drops back down. One would be here as it drops back down. If it does that, that's the wrong tool. I wanted to draw with this straight line, and it might do something like this and then break this bigger support. So we would have lower highs bearing down on it, more tests, more frequent tests of support. That would frustrate more of the long holders in here. It would embolden the short sellers, and this thing could fall apart beautifully, down into 20. It might round trip just like every other stock out there that I've pointed out. Stocks like POSH that people love the IPO. It came public at $42 per share, traded as high as 105, and here is $10 per share. How about Peloton? Continues to be just a piece of garbage. There's no other way to describe these stocks. They're well below their IPO prices. No one's making money in these except the short sellers. On a closing basis, it just closed again at a new all-time low. It has never closed lower than where it is today. Why people keep looking at this stock and is beyond imagination. The 20-day moving average even has been beautiful as far as a level of supply that became resistance. So enjoy your long weekend. I'm going to try not to look at the markets at all. Let's just take a quick look actually before I always forget to talk about Bitcoin. I took my money out. I think I mentioned it here when the first of these brokerage for I don't know if you call them brokerage firms, the bookies for the cryptos. When the first one about 7-8 weeks ago said that they were halting withdrawals, I said that's it. I'm taking 95% of my money out. That was at about 38,000, and it continues to just be terrible. This is something I pointed out is the low that it made around 17,500 when you anchor a volume weighted average price from that. You can see it bounced up. Buyers initially looked like, hey, maybe this can turn into something bigger. So as it rallies away here, set your stop under there. It made a higher high, so maybe you wanted to raise your stop under this level. Or perhaps you waited for it to get back below the volume weighted average price. When it was below the volume weighted average price from this low, it meant the average long participant is now losing money from that point. The average short is making money. So as it broke down, yesterday we saw, a little sucker rally back up to the top end of that range. And guess what? Sellers were waiting for it again. It's going to take a long time for Bitcoin to heal. I'm not a hater of Bitcoin. I'm not a Bitcoin hodler. I'm a person who looks at it and says, this is a trading vehicle. And right now it's a broken and needs a lot of time to heal. So again, enjoy your weekend. Subscribe to the channel, give it a like, and thanks for your time.